You have been told stocks are the ultimate path to financial success, right? That's what most people think. But what if I told you there's another game in town? A market that's not only overlooked by most of us here in Malaysia, but where the real smart money is quietly making massive moves in 2025. Forget scrolling through charts and tech giants for a minute. What I'm about to show you is fundamentally different. Something tied directly to our daily lives and something that's experiencing a surge of volatility that spells incredible opportunity. We're diving into the world of futures, specifically agricultural futures. You see, not everything can be traded on a futures exchange. You can't trade bananas or cars, not because they aren't valuable, but because they are messy. To be listed on an exchange, a product needs to behave like a commodity, meaning it has to be homogeneous, standardizable, liquid, and storable. Corn? You can store it. Measure it. Durian? Not so much. That's why wheat and soybean became futures contracts and why they have been traded for over a century. They are predictably valuable, deliverable, and priced efficiently by the market. And that pricing mechanism, that's what makes it tradable. Now, let's talk about why right now, this moment, might be the most interesting time in years to start trading agricultural futures. First, you need to understand something that most new traders miss. Futures traders love chaos. Not confusion, but volatility. Because every spike, every drop is a chance to act. And right now in 2025, the world is full of volatility. El Nino, the weather phenomenon, has just ended, and neutral weather patterns are causing unpredictable crop conditions. Geopolitical instability that's happening all around the world. All of this is fueled for movement. In fact, professional traders are already positioning. At the time of this recording, hedge funds increased their bearish positions in wheat to the highest level in 2 years. And they also reduced their exposure in corn. That tells you something. They're seeing opportunity, not in the headlines, but in data. And if you think I'm just saying this to hype up the market, I'm not the only one saying this. Some of the sharpest eyes in the futures space are already ahead of the curve. One of them is Jeffrey, a veteran trader who has been navigating futures market long before most of us knew what the CME even was. He traded through rate cuts, global crises, and more commodity cycles than most brokers have had birthdays. And when volatility dried up in other markets, he knew exactly where to look.
Imagine the agricultural price just keeps going up and up. I think the bowl of noodle or the bowl of rice today will not be as what it is today. It would have been triple, quadruple along the way, right? So it tends to trade in a range, but this range is something that is acceptable by the general public, I suppose.
Yes.
But what's interesting is the volatility in the range.
Yes,
that
that's
is
right.
what traders are looking for, actually.
That's correct. So traders like myself, I come from a. If you had had this conversation 5 years ago and say, hey Jeffrey, come on the show, I wouldn't be talking about agriculture. I'll be talking about a different asset classes, interest rate. That's my background.
Right.
When rates went to zero, I was hunting volatility.
Okay.
So I found that in eggs.
Apart from the economic data Jeffrey shared with me, there's another factor that is bigger than that. It's not interest rate, it's not GDP numbers, it's something far more unpredictable and far more powerful. It's the weather. Because when weather hits crops, futures price move.
When you start planting the seeds, obviously, after planting the seeds, obviously you need adequate rainfall. And when you head towards harvesting, obviously you need the weather to be warmer, right? So obviously that will have an impact on the weekly data. And America is such a big country, and they plant agriculture, the southern states, the Midwest, and also northern. So, the weather will affect differently at different times of the year. So, when it's when the plants are blooming, then obviously you need adequate rain. But when you're harvesting, then you need the right amount of sunshine and sunlight.
That's the rhythm traders follow. And right now, the forecasts say 2025 will be unusually warm across the US. Corn Belt from May through October. USDA already reported that corn planting is behind pace, and winter wheat, while slightly improved, is still facing inconsistent rainfall, which means supply uncertainty, which means price swings, which means opportunity for traders who are watching. Here's the part that surprises me most. Most retail traders are already familiar with agricultural futures. They are most likely trading palm oil futures or FCPO on Bursa Malaysia. But most of them, they've never looked beyond for other contracts such as soybean oil on CME.
One of the reasons why agricultural products isn't a product widely traded by retail traders, I think it's a function of the lack of information, education. To be honest, I find that there is a lot of opportunity. Most traders in Malaysia, if they trade on Bursa Malaysia derivatives, their flagship contract is the FCPO. If you're already trading FCPO and you want to start trading CME markets, I think your natural step would be trading soybean oil, because there is some form of close correlation between the two markets, and that's how you start, building your agricultural portfolio.
And it's true, the structure is similar, but the liquidity is better, the volatility is richer, and the global demand is deeper. You're not just trading Malaysia anymore, you're trading the world. And this is the perfect time to talk about the sponsor of today's video, Affin Hwang Investment Bank. If you're ready to level up your trading game, Affin Hwang Investment Bank Trade, Win and Repeat CME campaign is here with exciting rewards. Trade CME Group products via Affin Hwang Investment Bank Berhad and climb the leaderboard for a chance to win up to 5,000 ringgit worth of prizes. Plus, every month, the first 5 clients to trade 5 lots win 100 ringgit instantly. But that's not all. Enjoy brokerage rebates to reduce your trading costs. New to futures? No worries. We have Affin Hwang Investment Bank's licensed FBR ready to guide you step by step. Now, back to the video. As I said, you are not just trading Malaysia, you are trading the world. But hey, none of this matters if you blow up your account. Futures are leverage, which means gains can be fast, but losses are faster if you're careless. That's where discipline comes in. He teaches his juniors one thing: always define your downside. If you're risking 1,000 ringgit, your stop loss should let you walk away with at least half and never add to a losing position.
When you do go live, what I tend to do with the junior traders is they will have, to those who are just trading intraday, they'll have daily stops. For those who have longer term positions, they'll have a weekly stop. So how do we come up with that number? Now, a lot of people would say, okay, you don't want to lose 2% on a trade or 1% of a trade. I think that might be suited more towards investing. Whereas when you're trading, I'll go on the rule of thumb is like, you don't want to lose 3 times your average daily profit in a single day. A lot of people like to talk about technical analysis as if you've got a product to sell, right?
Yeah.
I could show you a system. I could show you. I could show you a few patterns.
Right.
Come and sit down and people want to see results. People want to hear, I got to do this. I got to do A, B, C, and D before I can even trade. Whereas like you draw up a chart and information is freely available.
So here's the question. If the opportunity is here and the tools are available, why haven't more people started? Maybe they don't know where to start. So let me give you a roadmap. Number 1, open a futures trading account. If you don't have one, check out brokers like Affin Hwang Investment Bank. They offer global futures access. Number 2, study the market. Focus on 3 products: corn, wheat, and soybean oil. Number 3, track the USDA crop report released weekly. They are your compass. They help you to anticipate the futures price movement. And number 4, watch the weather, especially heat waves or drought zones in key US farming states. Number 5, start small, manage your risk, and let experience teach you. The market doesn't wait, and agricultural futures, they move whether you're watching or not. So if you're already trading stocks, maybe it's time to expand. If you have traded FCPO, maybe it's time to go global. And if you're just getting started, start with Affin Hwang Investment Bank. Now, they even give users access to trade crypto futures, the first investment bank in Malaysia to do so. Thank you for watching. I'll see you in the next video.